ONGC crashed 40% in less than a year, and now it's bouncing back hard, and there's a very specific reason for this. Let's start with what ONGC actually does. They are India's biggest oil and gas producer, responsible for around 70% of our country's domestic crude output and over 84% of our natural gas. India imports over 85% of its oil, so ONGC is essentially the most strategically important energy company in the country. The government will not let it fail, and that backing alone gives it a floor that most private sector companies simply don't possess. Now, let's talk about why the stock completely collapsed from around rupees 344 in August 2024 all the way down to around rupees 205 levels. That's a 40% crash for a Nifty 50 company. Now, there are two reasons for this. Firstly, Brent crude fell from $90 to below $70 on barrel on China demand fears. Since ONGC's earnings are directly tied to oil prices, lower equals lower profits, and this equates to a falling stock. But the second reason was more dangerous. This is the ghost of the 2022 windfall tax. When the government slapped a surprise levy on oil producers in 2022, it scarred institutional investors globally. Even as crude recovered in 2024, they refused to give ONGC credit for higher prices because they feared that the tax would return and wipe away the gains. This fear made ONGC one of the worst performing upstream oil stocks in the world. Now, but currently there are key factors which can help see a potential increase in its stock prices. The first is a revenue boost. As an upstream producer, ONGC receives higher prices for the oil and gas it extracts. When global oil prices surge, enhance and this helps to enhance its profitability. As you can see, I'm recording this right now on 15th of May, and just today itself, the government of India reduced oil and diesel prices by around 3 rupees per litre. So this leaves a lot of room for potential for the profitability margins to increase for ONGC. Now, there are recent government decisions to cut royalty rates as well on crude oil and natural gas, which have further improved the profitability for upstream oil companies. And this provided a direct boost to ONGC stock. Unlike other oil marketing companies that face losses during high prices, ONGC benefits because its production cost stays relatively stable while the revenue for prices increase. Apart from this, there's also a huge energy security focus. Due to the current geopolitical tensions affecting the supply of oil, the Indian government is prioritizing domestic exploration and production, and with this helps support the long-term growth for the company. Now, recently, on May 8th, the government did the complete opposite of what the market feared. They cut the royalty rates onshore, and royalty dropped from 16.6% to just 10%. And the governmentally explicitly confirmed that there will be no new taxes on the E&P sector. Thus, the windfall tax fear is officially dead. Now, as you can see here, I have taken the support level to be around 277 rupees. This is indicated by the strong demand zones over here and the resistance level to be around 307 region due to the strong supply region over here. Now, how would you go into entering into this trade? Now, as I said, that the government is currently increasing the oil prices in India. This means that the share price will go up because of the revenue increases or profitability margins increase for ONGC, which is an upstream oil company. So let's just wait a few more days and see how the government goes about increasing the oil prices, whether it goes at a steady rate or if it does at a very sharp rate. So please take a bit of precaution in trading this stock. But as I said, due to all the reasons, the company's profitability will keep on increasing as the petrol and diesel prices keep on increasing in India. So there's a good upside potential to this stock. So if you were to enter into this trade, what I would do is that just wait for it to break the resistance level over here. And above that, you can enter into a GTT trade. So you can do that by right clicking create GTT, go to buy order, and then You can buy it at 310 price level, and you can obviously do this for how many ever quantities that you want. So let me just create a GTT order right then, and you can also create your target and stop loss order as well. So let me just do that. Create on GTT, right click, go to sell, one cancels the other. Now I will set my stop loss just below the support level, which is around 275 rupees. So let me just do that quickly. 275, and do the same for this side as well. Now for my target, I'm expecting ONGC to reach at least 350 levels within the next few months, given that the current ongoing price fluctuations keep on happening and the government may keep on increasing the prices. So this is my target which I have kept. And obviously you can adjust all this according to your own analysis. And voila, in this way, we have created a GTT order which can execute if our analysis does come correct. So, if you like this video, please follow for more such tips like this. And please keep in mind this isn't financial advice. Please trade at your own precaution. Thank you.